Good evening, everyone. I'll first like to welcome the viewers who have dialed in from all parts of Southeast Asia. We see colleagues and clients from Singapore, Malaysia, Indonesia, Thailand, and the Philippines. Thank you for spending your Wednesday evening with us. Many of you are either existing landlords or have the intention to invest in the London market. You have approached JLL team to ask for an update on the London property market. So what's better than bringing the experts and the answers directly to you at your safety of your home? I am pleased to introduce my speakers for today. These are industry experts that I've been working with for over a decade in my time dealing with international residential. We have Miss Lucy Morton, who is an instrumental figure at JLL, being the head of the residential agency. We also have Sam Molloy, a face that is not unfamiliar to many of you in Asia, who is a partner at PCB Lawyers. Of course, if you haven't known me yet, I am the head of international residential at JLL Singapore. And today, my co-host and facilitator is Mr. Goldney Sidley, Director of Client Services at JLL London. So a quick look at the agenda for today. We have Sam, who will start off by giving you an update on the new stamp duty law and also insights from a legal perspective. Following that, we have Lucy, who will be talking about the resilience of the London market. And Louis will also be introducing some spotlight locations for those of you who are interested to know what is good in London right now. Finally, we will be having Q&A session at the end of this presentation. If just a quick housekeeping, there is, excuse me, there is a Q question at the bottom of your screen. That is where you will be able to fire away your questions and we will attend to it at the end of the presentation. So without further ado, Sam, over to you.
Thank you, Widya. So good morning from London. Good evening to those of you in Asia. For those of you who don't know me, my name is Sam Molloy. I'm a partner at PCB Lawyers. On this screen, you'll find my contact details, and you can also speak to JLL to ask them to share them with you if you need them later on. And I wanted to mention we've recently launched an e-newsletter providing market updates like the content we're going to be covering today. So if that's of interest, please do email me and I'll add you to that list. Just going to talk a bit more about the firm and what we do. As a law firm, we specialise in property, both commercial and residential. On Resi, we focus on new build, and with a particular emphasis on overseas investors like yourselves. Just like JLL, we have a major base in Asia, and as Widya says, hopefully I'm a familiar face to some of you. PCB's relationship with JLL spans many years, decades even, and we have a particular bond in connection with the overseas element. We've done many exhibitions together, so we hope our experience and expertise in servicing overseas investors, especially in Asia, will be useful today. Ancillary to our property work is wills, probate and general tax advice, and I'm going to be talking about the latest developments in stamp duty a bit later on. But first I want to talk about COVID-19, which I'll get onto in a second. And just a reminder, as Widya said, do post your questions throughout the event, and we'll try to answer as many as we can at the end. So COVID-19, the C word. There's no escaping how pervasive this has been, and I'm not going to try to convince you everything's normal. However, I do consider our area of work to be one of the lucky ones, for the reasons I'll explain. First, if I can just mention the government guidelines. Some of you may have read or heard about the announcement by the government a couple of weeks ago regarding conveyancing transactions. Essentially, the advice was that only essential moves should take place. Those who had exchanged contracts should try to negotiate later completion dates and only proceed if they absolutely have to. And those who haven't been reached the stage where they'd exchanged contracts were encouraged to put things on hold. Now, what I want to emphasise is that this was addressed just to high street conveyancing, and by that I mean people moving house. These guidelines do not apply to those who are purchasing off plan, or effectively anyone who doesn't need to physically move. Anyone in that category can still proceed, and actually, as I hope you'll see, things are fairly normal in that regard. In fact, we've adapted to ensure there's no disruption to service for those who still want to transact, and we've continued to exchange and complete as normal for those that are still active in the market. We're able to do this because for 30 years we've been coming to Asia and dealing with investors in the region, so we're well versed in both working away from the office, now at home instead of in an exhibition room, and also servicing clients without meeting them, as we do all the time with our non-exhibition clients. And hopefully some of you fall into one or both of those categories. The situation isn't usual, but we're calling it business as unusual, and clients can expect the same high level of service that they've been used to across the years. I've no doubt that JLL will say the same about their own services, as exactly the same principles apply to them as well. So as an investor, the services are available to enable you to transact, and off-plan investment is uniquely resilient to this strange new world we find ourselves in. This is because with off-plan, there's no viewings. That's been one of the main things that have affected the rest of the market. But with off-plan, you don't see the property anyway. It hasn't been built yet. You're relying on developer CGIs, information and marketing materials from experts like JLL. And that's been the case for as long as I've been working in the industry. All that's required is an objective assessment of the development and the area. And the tools that we've had to give you that information have already been developed and are already excellent. And I think you'll find that as a result of this change, they'll be even more enhanced, so possibly even an improvement. I think you'll also be pleasantly surprised by Lucy and Louis' findings on how well the lettings market has held up, and that would be one potential area of concern for an investor, but I'll let them explain that's been pretty resilient from what they've said to me. You may even hopefully benefit from this crisis, as we hope there'll be some bargains to be had from developers who are keen to do deals. When the market overall is affected, that's when developers want to sell the most, and hopefully it will create a good buyer's market for you. So just briefly to cover beyond COVID, because this storm will pass, hopefully sooner rather than later, and we very much see Asia as leading the recovery, not only because that's what we've seen with previous market cycles, but Asia also seems further ahead in the COVID story and coping with it remarkably well, and likely to get back to normal ahead of the West as things. We're also, as I touched upon, fast-tracking practices and making the tools even better. We're looking at things like electronic signatures and video AMLs in response to this virus, and we can expect those things to continue once the market and life gets back to normal. So once that happens, we hope you'll find the process is even easier and even more convenient than it was before. I think that's probably enough about COVID from me, so I'm going to now update you on the recent stamp duty announcement. So on the 11th of March this year, our Chancellor, our new Chancellor, who's been extremely busy since, announced a new SDLT band for foreign buyers. Foreign buyers in this context, means non-resident. Obviously, this announcement was not ideal, but we had been expecting it for quite a while, and the actual rules that came in were not as bad as we'd feared. We'd been expecting 3%, it's 2%. This relatively low figure maintains London's status as a highly competitive centre, and as you'll see in a couple of slides, JLL have provided a chart which shows just how competitive London remains. We also thought it would be effective immediately, but it's not coming in until April next year, so another nice surprise. This is good for two reasons. Not only does it allow time to invest without paying the tax, but we also anticipate it will stimulate the market in the run up to April 2021, creating a gold rush, as we've seen in the past when they've introduced similar changes. That gold rush will focus on completed stock units, which also comes with a number of advantages. For example, in a minute I'm going to talk about the weak pound, and buying a completed unit enables you to capitalize on that, not just on exchange, but on the completion monies you're paying as well. And you can also start getting use out of the property immediately, whether it's for your own use or, as Lucy and Louis will explain, the letting market can help you start generating an income straight away. I just want to go into a bit more detail and show you the mechanics of how the stamp duty is likely to work. I do need to just caveat this slightly. This doesn't constitute tax advice, and one of the reasons that is the rules haven't been properly announced yet. But based on previous changes, we can be fairly confident on what we think will happen. And that is, firstly, for all completions that take place before April 2021, there's nothing to worry about. That's why we expect a short-term boost to the market between now and then. Those of you exchanged before the budget announcement on 11th of March can also relax. While the official position is pending, the government has stated that transitional rules will apply to those who exchanged before the announcement. In the past, that has meant such buyers could apply the rules in force at the time they exchanged, so long as they have not assigned or varied the contract between the announcement and completion. So it's only really relevant if you exchange now or have exchanged since 11th of March and complete from April 2021 onwards. Even then, though, you may still be able to claim the additional tax back if you subsequently apply to become a UK resident. Often one of the drivers for our clients is purchasing a property is so they can apply for a UK residency. So hopefully that will be good news for some of you. Just to put the tax into perspective, as I mentioned earlier, JLL have put together a chart which shows the cost of buying a property in London when compared with other jurisdictions, and property taxes, as you can see, remain favourable in the UK, especially when you look at our main competition, Hong Kong, Singapore and Sydney, a lot lower. So lots of reasons to be positive about where we're at. I'd just like to conclude by talking about the wider market and the impact what I've discussed today may have on it. I've already mentioned the gold rush we expect in response to the new stamp duty, but going into this year, the outlook was incredibly positive. We felt that the market was in a good and resilient place to absorb the stamp duty change and weren't particularly worried about it looming, to be honest. I've already talked about London's competitiveness and when compared to other jurisdictions, as shown by the last slide. And due to the political wranglings, which are thankfully now largely behind us, the pound is relatively weak. London prices have undergone a correction in that time as well. And we've seen numerous market cycles now where our clients have been able to take advantage of that situation and make not only a capital appreciation gain, but also a currency gain as the market and the pound recovers over time. This time the currency advantage is even stronger in the context of completed units. As I mentioned, being able to not only get a good exchange rate when you're exchanging contracts, but also when you come to complete as well. We just recently had an election, although it seems a long time ago now, and everyone was touting the Boris bounce going into the year. Another reason adding to the good sentiment. Whatever your politics, I think we can all agree that the Conservative majority is a good thing for the property industry, and everyone had a very positive feeling starting this year. Fast forward a few months and it hasn't quite panned out as we expected, but the Boris bounce has been deferred, in our opinion, and the COVID situation has actually added a few elements that may help when the market starts to recover. The stock market has been going through a difficult period, and historically we've often seen investors switch from stocks and shares to property, which is very much seen as a safe haven. So we hope that flight to safety will kick in once the market gets going again. And there's been a lot of money printing by governments around the world, and property is a classic inflation hedge. So we hope that those factors will then play into what people are already talking about, not only a Boris bounce, but also a COVID bounce as well. That's all from me, and as I said, please do post your questions. I'd now like to hand over to Lucy Morton, who is Head of Residential Agency for JLL in London. Lucy is a fellow member of RICS and has also been on the ALA Council since 1990, including a stint as its president. Over to you, Lucy.
Thank you very much, Sam. And thank you everyone for joining us. I'm sorry that we're not with you in person, as we'd dearly like to be. The London market currently benefits from a number of strong underlying market drivers. We're undergoing a fundamental change to our population. 62% of UK babies are now born to parents over 30. Having children later has created a generation of renters known as Generation Rent. With the average age of the first-time buyer in the UK now over 40 years old, we've seen a hugely increased demand for rental property. Towns and cities will see the highest housing demand from renters. 200,000 additional people are living in the world's cities per day, and 2.5 million additional people will be living in the UK cities by 2024. London is the UK's leading city and will remain at the world's top table. The population of London is growing by 1 million every decade. In terms of attracting talent and therefore high earners, London ranks among the world's 7 leading cities due to its strong universities and talent retention. In the 21st century, industries such as retail tech, fintech, and medtech are all growing in the capital. Lastly, there's an undersupply of new homes being delivered by the residential construction industry. House building is not keeping pace with demand for new homes. Going into the start of the year, we were operating in a very confident, strong market. As Sam mentioned, we were going through the Boris bounce. The Conservative majority in the December election was seen as a huge positive for the London economy and the city prospects. It brought with it increased certainty over Brexit and a conviction that Brexit would be handled in a pro-business, competitive manner. 3 years of reduced investment since the Brexit referendum, while people waited to see what would happen, but meant that there was a considerable amount of pent-up demand for London. In addition, a relatively weak pound sterling at the start of the year encouraged investment in London. And then COVID. Since the 13th of March, London has been under lockdown. I thought Sam's comment was very true, that it's been business as unusual rather than business as usual. The immediate effect of COVID-19 was a very quick slowdown in the rental market. Demand was stifled because tenants were just not able to view, and many returned to their hometowns and countries on a temporary basis. However, tenant demand for rental accommodation has now bottomed out and is already recovering. Since the 30th of March, rental demand has risen by 30%. Zoopla evidence suggests that this increase in demand is almost all attributable to London rather than other regions. The supply of new homes for rent has fallen sharply over the last month, as many agents have had to close their branches and many tenants are staying in their properties. This is good news for landlords, as less supply will drive prices up. Unlike many agents who have had to shut down during the lockdown, JLL are extremely well set up to work remotely and did so from day one on both the letting side and the sales side, with virtual tours and videos, and also from our property management side. We have been successful in finding tenants for new vacant properties. We've found tenants, in fact, for over 100 new properties in London since the lockdown began. And this figure is rising fast as restrictions are starting to be very slightly relaxed. Please do let Widya know if we can help with any of your properties not currently let or managed by us. This is what we think will happen to the market when we come out of lockdown. You'll see on the graph that before COVID-19, demand in 2020 was noticeably higher than in 2018 and 2019. We think that this means that when lockdown measures are lifted, there'll be a large pent-up tenant demand, which will see increased activity in the rental market. As I said, we're already noticing a spike in inquiries, particularly over and since last weekend. The traditionally strong market months in summer and autumn, which coincide with most job and education starts, is going to be condensed into a much shorter time frame this year, and we'll come out of lockdown hopefully over the next few weeks in the summer. The rental market will further be strengthened by an unforeseen imbalance of supply and demand caused by COVID. In mid-April, we predicted a potential 30% reduction in new development starts this year and a 20% fall in completions. Depending on how long construction continues to be disrupted, these reductions could end up being even more pronounced. In terms of the globe's long-term recovery from our current situation, residential has always proved to be a very resilient property class due to the need for everyone to have to live somewhere. We think that the London residential market will lead the way in terms of the recovery, as we are already seeing a noticeable increase in tenant inquiry levels. I look forward to answering any of your questions, and I now hand over to my colleague, Louis Goldney, Sidley.
Hi there, everyone. Thank you very much, Lucy. It's a pleasure to talk to everyone. As Lucy says, sorry we can't be there with you. I'd just like to very quickly shine the spotlight on a couple of specific areas in London, Nine Elms and Canary Wharf. But before I do a little bit of housekeeping, I've just opened a poll within the event, and if you could just answer 3 quite short questions about the event, it'd be really appreciated by us. And secondly, when I finish speaking about these 2 areas, I will be hosting a Q&A with Sam and Lucy on both the legal side and the letting side. So if you have a question that you haven't asked, again, please do put that in the Q&A section. I will try to ask as many of the questions as I can. Yeah, just before I do that, like I say, I'd just like to talk about Nine Elms and Canary Wharf, and these areas in particular because, well, partly because 2 of our flagship agency offices are located in these areas. And it's fair to say we're market leaders in both, so we've got a very good feel for what's happening in each of these local markets. And the Nine Elms office has been there for over 5 years now and helped to launch 2 of the first developments in the area, which were Embassy Gardens and Riverlight Quay. And our Canary Wharf office is a big sort of corner site next to the Credit Suisse building. And I think it's only one of 5 agents that are in the Canary Wharf estate itself. I think we're certainly the only agent to have offices in both Nine Elms and Canary Wharf. So yeah, just firstly, spotlight on Nine Elms. Nine Elms is the fastest changing residential neighbourhood in central London. And as someone who, well, I work there 2 or 3 days a week, if you haven't been to Nine Elms for a couple of years, I really would recommend visiting next time. Well, next time you're over, fingers crossed won't be too long. The area's become very vibrant. There's a huge number of kind of high-end cafes, restaurants, and gyms opening now, and it feels like a residential area very much so now. It's in a strong position already, but it hasn't fulfilled quite its market potential, we don't think, because there's 2 really key market drivers in the local area, which are on the very sort of close horizon. Firstly, Power Station shopping centre is due to complete kind of late this year, early next year. And this will be a sort of game changer for the area. It will bring 20,000 jobs to the area, and it will become central London's 3rd largest shopping destination overnight. It's estimated that 40 million visitors per year will visit Battersea Power Station for the shopping centre. On top of shopping, we've got Apple occupying 500,000 square feet of office space. And a further 750,000 square feet, of which 70% is already let. So Battersea Power Station is a huge event for the Nine Elms area. And additionally, next year, we have the opening of 2 tube stations. So 2 underground stations in Nine Elms, which will be on the Northern Line and offer massively improved connectivity for the foreseeable future to the whole area, but especially into the city. It will be a sort of single 15-minute train into the city. So these 2 game-changing events will see a step up for Nine Elms. We're anticipating even greater tenant demand in the area because of this. The population of the area is forecast to increase by more than 10,000 people over the next 5 years, which is a kind of circa 30% increase in population. The population that currently inhabits Nine Elms as well is very favourable for the lettings market because there's a far higher proportion of 25 to 35-year-olds in the area. And there's a far higher proportion of the demographic that's characterised as young professionals. You might also see them labelled as rising prosperity. This is noted to the London average as well, which means there are a high proportion of private renters in the area. You can see on the screen now that we're predicting 5-year growth of 19% on the sales side and 18% on the rental side. But you can see that our predictions for value change, particularly on the rental side, are quite pegged to 2021 and 2022. This is reflective of the fact that we have these 2 game-changing events, the Power Station and the Tube, which are happening next year, and they will drive value increases in the area. And before I get to the Q&A, I'd just like to touch on Canary Wharf as well. It's another area which has changed a huge amount in the last couple of years. So if you haven't been to Canary Wharf for a few years, next time you're over, I really would recommend it. It kind of reminds me of Singapore, actually, in that it's a really clean, safe, green environment within London. It's a relatively small space at 128 acres, but there's 120,000 workers there. There's 16 million square feet of office space. I think that's the Canary Wharf that everyone knows. In addition now, there's 300 shops and restaurants in Canary Wharf, and 49 million people visited those leisure facilities last year. There are 20 acres of parks, gardens, garden squares, open space, and there are over 100 art events in Canary Wharf every year, and over 60 kind of pieces of permanent art which are on display to the public at all times. So I hope this paints a picture of Canary Wharf being a really vibrant kind of mixed-use neighbourhood in central London, and as an already established social hub. So Canary Wharf's already a leader in the rental revolution. The current wave of developments are attracting the attention of a huge number of renters. It's a lifestyle preference and a flexibility preference to rent, and our occupancy rates on rental apartments in Canary Wharf are already among the highest in London. Vacant periods are close to 0 really because of the competition for apartments. But I would point out expecting rental demand in Canary Wharf to enjoy a kind of unexpected benefit from COVID-19 actually, which is that we're already seeing more and more tenants wanting to live walking distance from their place of work. I think operating under lockdown kind of has made people reconsider their lifestyle priorities and the way we live. And we expect this to emerge as a really distinct trend when we get back into the peak of the market, which Lucy mentioned. Post-lockdown, but in the summer months, Canary Wharf will, hopefully, obviously, be a major beneficiary if there is a drive from tenants to want to live near their place of work. So we are expecting both sales price and rental price growth to be strong over the next 5 years in Canary Wharf. Again, I've displayed the JLL predictions on the screen, and again, you'll see that the growth is kind of predominantly, focused on 2020 and 2021 again. Crossrail was due to open in 2020 when these predictions were made, and it's now been pushed back until 2021. So I think that with Crossrail due to complete in 2021, we would expect the peak growth to be even more focused on that year in the area. This will be a real step up improvement in connectivity for an area which is already very well connected, but Crossrail will enable you to get into the city in, I think, 6 minutes to Liverpool Street. It will be a quick train to the West End, half an hour to Heathrow. So it is a step up improvement in connectivity for Canary Wharf, and it will broaden what feels like the centre of Canary Wharf, which hopefully I've kind of painted a picture of somewhere which is a bustling social hub there now. I'm going to ask Widya to send a couple of videos to everyone, if you don't mind, after this seminar, just showcasing a development in each of these areas. Embassy Gardens in Nine Elms and the Madison in Canary Wharf. I think these videos give a really good idea of the two areas as well as the developments themselves. If you do have 3 or 4 next spare, I would suggest they're worth a watch if you would like a little bit more context to what I've said in terms of these areas. Thank you very much. Yeah, thank you very much for listening to me on that one. I'm going to host a Q&A with Sam and Lucy now, if that's okay. As I say, please do, thank you very much for all of your questions. I will try to cover as many of them as I can, okay? Sam, I'll start with you. A couple of tax-based questions to start with. You spoke about the foreign stamp duty. Does that also apply to purchases made and completed by a UK company? And actually, while you're there, I've got the same question related to a BVI company as well. I think you're on mute, Sam. So
no, realise that. I'll start with BVI companies, because that's quite an easy answer, to be honest. Even before this stamp duty announcement, the government had aligned things so that there wasn't really any benefit to using an overseas company versus a UK company. There are all the reasons you might use a company, and there are plenty of good ones. You get the benefit from that by using a UK company. Used to be that there was some estate planning you could do with overseas companies, but that's all been brought into line now. So there's no reason to use an overseas company. And as for using a UK company and the new stamp duty rules, it's a little early to tell, I'm afraid. I've taken advice from a barrister that we deal with a lot, Patrick Cannon, who specialises in stamp duty. His comment on that particular point, if I can just check it, he thinks there may be a separate residence test for companies. And I also spoke to a partner at Price Bailey, who are a firm of accountants, who we also refer for complex stamp duty questions, and his feeling was that it wouldn't apply because he just thought it would be too complicated for them to figure out who the beneficial owners were and where they were from in terms of residency. So it's too early to tell is the answer to the question, but there is some hope there that it might be a possible way that overseas investors can mitigate their stamp duty exposure.
Thank you very much, Sam. I think that was pretty comprehensive. I've got a couple of questions along the lines of, with the increase of stamp duty happening in April next year, as you say, do you think there's any chance that this might be sort of delayed, postponed due to the COVID outbreak being more serious than at the time of the announcement? And in fact, I've also got a couple of people asking whether you think it might be kind of more permanently postponed or cancelled in order to give the economy a boost.
Yeah, nice. I saw those questions. It's possible. We're already at a point where we would have expected to see the rules published, and I could be giving a more definite presentation and answers to the last question, for instance. Obviously, a lot's happened since the budget announcement, a lot of things that no one was expecting. The only comparison I can think of is they talked about a review of ground rent back in 2017, and then we had the whole Brexit situation, and that was obviously put on the back burner as a result. When the UK government's busy with other things, which it certainly is at the moment, and those sorts of things do tend to end up on the back burner. Whether or not that means they won't introduce this in due course, I don't know, but it could change. And to answer Khalid's question in the Q&A, whether they would get rid of it to stimulate the stamp duty made me think that actually before going into this budget, we were hopeful that they may make some changes generally to stamp duty to make it more favourable to locals. So that could still happen, and that would most likely affect everyone. So foreigners might still be paying an extra 2%, but the overall rates might be lower. So that, you know, everyone could end up better off. So we just have to watch this space on that.
Okay, brilliant. Thank you very much. And there's a couple of questions here which are kind of along the lines of people who have exchanged on units recently, kind of last week, or perhaps are planning to exchange shortly, that may be expected to complete in January next year. What happens if completion is delayed past April next year?
I think we don't know, and it depends what their contracts say, whether they contemplate COVID situation having any impact. But generally speaking, the government aren't really looking at the details of the contract. They'll be looking at the exchange date and the completion date and applying the rules accordingly. So I don't think there's anything that would suggest that the fact that there was an earlier estimated completion would have any impact. We see new build developments, their estimates do change for various reasons, and that doesn't have an impact on the tax.
Yeah, perfect. Couple more questions, if you don't. Got one quite interesting one, which was sent in advance, but I think it's kind of worth thinking about. Someone's asked whether you know what the stamp duty policy would be for a non-resident buyer buying a bulk of 6 or more units.
Yeah, so that would, in that situation, that they would qualify as a commercial transaction, a commercial property transaction rather than a residential, and already lower rates would apply. There's absolutely no reason to think that would be any different this time round. The rules have been announced in relation to residential property. The reasons behind that is for people to be able to locally buy their own home. So I've got no sense or indication that those sorts of commercial stamp duty rules would be affected by this change. So yeah, I would imagine they wouldn't have to pay the extra 2% if they were to buy a bulk of 6 units.
Perfect. Thank you very much. And actually, last question, and hopefully this means you made a good impression on someone rather than the opposite. But someone's asked, having used the developer's recommended firm to handle the purchase agreement, is it straightforward enough for them to use a different firm for the completion stage if they prefer?
Yeah, I saw that one. If it's us, then it's really difficult to move. But if it's someone else, then we can probably help you. That's me being slightly tongue-in-cheek. What I would be careful about if you're doing that is just what it might end up being quite costly. There may be costs that you incur with your existing lawyer that are outstanding that you have to pay, in order to disinstruct them, and equally the new lawyer may have to charge a little bit more than sort of half or whatever the proportion of work that's left, because they might need to familiarise themselves with the contract and the development. So if you've had a bad service or anything like that, then you might challenge the existing costs. And also, we do occasionally take over when we act for clients who want to use us specifically, or maybe they had a bad experience with somebody else. Perfectly possible. It's just a careful case of managing costs. If we're already familiar with the development, we can really mitigate those costs and just sort of charge for the completion work, really. So it really depends on the circumstances, and if it's something you're seriously considering, whether it's because you're already using us, I'd love to hear why you don't want to continue, but also if it's someone else, then yeah, I'm happy to have a conversation, see if we can help.
Yeah, thanks, Sam. Thank you. Lucy, I'm going to fire a couple of questions at you, if that's okay, just to give Sam a bit of a break. Just first of all, there's quite a few kind of questions, different wording, but essentially kind of asking whether will my apartment still be in high demand from tenants if I'm trying to rent it later this year in light of kind of COVID, I suppose, and the effects that might have.
Yes, we really believe that there will be pent-up demand. There will also be people wanting to move that perhaps haven't moved during lockdown because they could only move into vacant properties. But there will be people that are reassessing how they're living at the moment, and they'll want to move perhaps to have outside space, a study so that they can work remotely. So we are anticipating a lot of movement, and also new tenants coming into London.
Yeah, thanks for that. And actually, for what it's worth, I work very closely with all of the lettings teams as well, and I mean the demand is genuinely there at the moment. On a similar sort of vein, a few people have asked questions about, I guess, kind of, who will the tenant be post-COVID? Who's looking for an apartment at the moment? Kind of what's the demographic of people?
There's always the high net worth students that come into London. I believe they will continue to come in when we know about the universities and the lockdown. There are people, and as I say, people sort of moving into London, perhaps if they're living out in the country and they don't want to have to rely on public transport. So we believe that people will want to move in, but there's also, as I said, a shortage of new homes in London. So for that very reason, we believe that there'll be strong demand.
Yeah, brilliant. And next up, I think there's questions along. I've kind of tried to summarise them, and it would be good if you could touch on this. Seems to be a lot more positive than maybe kind of the sentiment out there, but basically people kind of asking, if they've got a tenant in one of their London flats who's asking about reducing rent, what are we seeing this? What are we advising our clients in that circumstance?
In April, 95% of our rents were collected and paid on time. We've seen 5% of our tenants either asking for a rent holiday or a rent payment plan. And in every case, we've looked at every case individually. We've discussed it with the tenant. We've asked for proof that their income has been cut or stopped. And then we've addressed this with the landlord to see whether they are happy. And in most cases, we've agreed a rent payment plan for the duration of their tenancy.
Yeah, brilliant. So kind of, basically deferral is kind of preferable over reduction.
Yeah, I mean, the two areas where we've seen tenants struggling is the restaurant business and also the sort of entertainment world. So those are the two areas where they're most affected.
Okay, brilliant. Last question, if you don't mind. I just noticed someone here kind of asking about if people are coming over to London kind of this summer and onwards, how are viewings being conducted at the moment? Are there virtual viewings available?
Yeah. So we, before lockdown, we actually introduced, we were, I think, the first agent to introduce virtual viewings about 2 years ago. So we have been conducting virtual viewings and also agreeing tenancies globally without people actually seeing the property in person. When lockdown came into force, we also had videos of most of our properties, where we have virtual tours of all our properties and videos of most. And of the 100 properties we've let since lockdown, they've all been carried out through videos or virtual tours. So anyone coming into London when the lockdown is relaxed, we will first of all be showing properties by video and virtual tours, so that they can then, if they are in London, reduce the amount of properties they want to see and select maybe a choice of 3, their top 3. But we will, we're hoping that the moment lockdown is released, that estate agents will be able to have strict guidelines with viewings, but we will be able to do face-to-face viewings as well.
Perfect, thank you. I think I'm going to hand back over to Widya now, if that's okay. Can I, just before I do, I'd just like to say I'm really sorry if I haven't asked your question. There's kind of a couple that are quite specific, so I think I might ask the team or myself to address them afterwards individually. It's also very possible I might have missed a few because I've kind of been, you know, kind of clicking through frantically. So I really do apologise if I have missed yours. The team, Widya's team, you know, kind of with the help of the speakers, will come back to you if it hasn't been answered. So apologies, but to you, Widya, if that's okay.
Yep. Thank you for all the speakers for your insightful sharing and comprehensive answers. As a landlord myself, I'm definitely finding the session very, very beneficial. So like what Louis mentioned, if you are unable to get your responses in this session, do reach out to the sales consultant that have been working alongside you separately. If you have a follow-up question as well, do come to our website, internationalresidential.jll.com.sg, by scanning the QR code there. That will lead you to our website, and we will attend to your questions as soon as we can. I know that for many of us in Asia, particularly in Singapore, we are still in a circuit breaker. So we miss all of you. We miss seeing all of you in person, but do stay connected with us. Have a chat anytime you want. Follow us on all the social media platforms that we have on Facebook, LinkedIn, and YouTube. So it's a long weekend, so I wish you a restful and healthy week ahead. Thank you again for joining us this evening.